account. Valuations have been high for 25 years. Do you want to still sit out of the market just because of high valuations, or do you want to make some money? And that's really where we got to get back to, and that brings us to what you need to know before the bell this morning. The big driver this morning right out of the gate is going to be this news about the administration. And one thing that is continuing here is this kind of this technical support line that we've had going back to these lows that we had when we first started this whole kind of tariff negotiation, starting to talk about tariffs, etc. Then, of course, we had Liberation Day that broke all that. Now we've taken that support level back and out, right? We've taken that resistance level out. We're back into support. This morning, we are going to be moving above this conglomeration of resistance at the 100 and 200-day moving average. This is that last line of defense between where we are right now and new highs. So if the markets can get through this and hold, right? They've got to hold above it. Just because we get above it for a day and then fell tomorrow, that's not a successful breakout. But if markets can move above this resistance level and take out that resistance, then that clears the way for this market to move back towards all-time highs. Now, I know that seems kind of hard to fathom given all the stuff that's going on in the markets, but markets are markets, and markets are going to do what they want to do. Markets are overbought here on a couple of different fronts. Momentum is certainly getting quite elevated here. Relative strength is elevated. And again, relative strength has been fading here over the last couple of days. So again, we're starting to see a little bit of a negative divergence between relative strength and the markets. We'll see what happens today. But again, this has been kind of this fight that we've been talking about with investors here for the last couple of weeks in particular, because this is where it becomes challenging as an investor, is to kind of put those emotions aside and just read what the market's telling you. And this market has been very bullish. Money flows have been coming back in. Relative strength has been improving. Momentum has been improving, and a lot of investors are just just fighting that whole rally higher rather than just letting it participate. And again, we're just, to be clear, we're holding, a higher level of cash than normal. We do have a short position in our portfolio that will likely get removed here once we get confirmation that, this market is finished with this correction process. And that's really the gist of today's article on the website was this just a correction? Is the correction now over? Or is there another leg lower here coming for some reason? And again, there's, people always say, Lance, can't you just tell me what's going to happen? I'm not pressing it. I wish I could tell you with certainty what's going to happen, but all we can do is analyze probabilities and possibilities. And technically, we're starting to get into areas that suggest this was indeed just a correction, and that is now over. Doesn't mean we're not going to have another correction, down the road somewhere, but again, expectations of a return to a bear market, a recession, all those type of things are slowly fading away here. So be careful fighting that narrative as we go. One of the big beneficiaries of today's announcement is going to be the dollar. Strong move up in the dollar. That's starting to pull risk assets. That's also pulling money back into markets. As the dollar strengthens, that drags in foreign inflows and money back into U.S. equities. That's helping support this rally. One of the non-beneficiaries today of this, of course, is going to be gold prices. As we've talked about before, gold is a liquidity source during a risk-on rally. So again, as you see that today, gold is declining about 3% this morning, as simply as just taking profits out of one area and putting it into another area. So again, this isn't a narrative on the world debts, deficits, currencies. That's not the way markets work. You can apply rationale to these things. But in reality is that you had an asset that was going up. It was extremely overbought. That money's now coming out, going back into other assets that present a better short-term trading opportunity. That's all that's happening. It's just a rotation in the market. Nothing more, nothing less. But that's what you need to know this morning before the bell.